Monetary policy is again under the spotlight as the South African Reserve Bank is set to announce its latest interest rate decision. This comes as the latest consumer price inflation has ticked up slightly following aggressive efforts to fight high inflation. In the previous MPC gathering, a pause was announced after 10 consecutive hikes in the interest rate, which began in November and have now resulted in the repo rate at 8.25%. Economist Patrick Buthelezi speaks to us now about the dynamics around this matter. Good morning to you, Patrick. What's expected later today?
Good morning to Ms. Sang, and good morning to all the viewers at home. So we expect the Reserve Bank to keep the interest rate on hold. Keeping interest rates on hold, you will remember that they've been hiking for a very long time, and interest rate is currently restrictive. So keeping it on hold, so we're still expecting to see the lagged impact of the previous rate hikes, and we're beginning to see the impact of that in the data. Inflation expectations have come down, and also inflation is back within the target band, even though right now is hovering towards the upper target band, but it's because of administered prices and also fuel prices that will push inflation towards the upper target band. But what they've done so far is already having an impact, and interest rate at this point is restrictive.
Speaking of inflation ticking up to 4.8% now, would we then be in a position to say that the aggressive stance of the hiking cycle is bearing some fruit, even though we are sitting with the repo rate of 8.25%, which is quite high and unaffordable for many consumers?
Yeah, it is, because what they want to achieve, they want to see inflation expectations moving towards the midpoint, which is 4.5%. At the moment, inflation expectations is still slightly high, depending on which survey you are looking at, and like, for instance, looking at analyst inflation expectations, that is slightly lower, but for businesses, inflation expectation is slightly higher, but it's also beginning to come down, which is indicating that the impact of cumulative interest rate hikes is beginning to bear fruit, and also inflation overall, because inflation was outside the target band, and it's only for the past 2 or 3 months where we have seen inflation returning within the target band. But the war against inflation is not over, because the objective is to see inflation moving towards the midpoint, which is 4.5%. So that is why maintaining interest rates restrictive is also a strategy, it's a decision by the central bank to ensure that over time inflation does return towards the midpoint, which is 4.5% over time. And we're beginning to see food inflation as well coming down. This time around, food inflation slowed to about 8%, and it has been slightly sticky in double digits over a long time, even though globally we have seen food inflation coming down significantly. But now in South Africa, we're also beginning to see food inflation coming down, which is something encouraging, especially for lower income households.
Yeah. Patrick, what would another hold in interest rates in South Africa mean for a stressed consumer in this country? Yes, it would be relief, but at the end of the day, there are too many challenges that are facing the financial status of the South African consumer.
Yeah, I think where we are in this rate hiking cycle, it's a very tricky situation, because now central banks must balance two competing forces. Because you still have this upside risk to the inflation outlook because of fuel. So you want to control the expectations. So you still have upside risk. So that is why the war continues. But at the same time, the economy, it cannot handle too much the interest rate hikes. So central banks, that is why, are at the very critical point where they must carefully balance not to allow inflation to move away, and at the same time not to tip the economy into the recession. So that is why our view is that what they've done so far, of which the governor has admitted in the previous meeting, that the stance of the monetary policy is restrictive at this point in time. It makes sense to maintain interest rates at this kind of level than to continue to hike further.
Lastly, is it too soon to start thinking that should we have the second consecutive pause, hold in interest rates in this country this time around, that maybe we are nearing a phase of a cut at some point?
Yeah, I think the pause at this point, it makes sense, but with inflation drifting higher, and I think it clearly indicates that the war against inflation is certainly and not over. And looking at inflation forecast, so that is why it's going to be very important in terms of what the Reserve Bank is forecasting when it comes to inflation, because inflation is expected to hover close towards the upper target band, and we know that they want to see inflation moving towards 4.5%, and inflation is seen moving towards 4.5% on a sustained basis very late, I think late next year to 2025. So that is why, in terms of expecting interest rate cuts soon, I think it is something that we think is at this stage is less likely. So higher for longer at this stage, it seems as more likely on current information.
We'll leave it there for now. Thank you so much for your contribution. Patrick Buthelezi is an economist at Sanlam, talking to us as we lead up to that interest rate decision expected from the South African Reserve Bank later today.